Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. Welcome aboard. Today is Sunday, the 28th of September. Time is about 7:34 a.m. New York time. And as usual, it's another weekend. I like to look at the charts and share my perspective of what I think these charts would look or present to us in the next coming week. In this weekend's analysis, I'm going to cover the dollar index. We shall also look at Euro USD. We shall look at GBP USD briefly. I might not do detailed analysis, just give you my projections on them so that I'm able to condense everything in less than 20 minutes. So it won't be my typical detailed analysis. I'll just give you a snapshot of what I think the charts is looking like in the next coming week. We shall also look at Bitcoin dominance, and Ethereum in this session as well, just to save me time on making a separate video. I would also look at the indices, the NASDAQ 100, SPX500, and I shall look at gold and silver in this analysis session. So it will be a quick one. I won't be probably as detailed as I've always been, and I hope you still find value in the analysis. All right, so let's start off with the dollar index, and I like to start off on the monthly chart since it's also almost the end of the month. So as you can note, the dollar index on the monthly chart is giving us close to a hammer or a reversal candle, in my opinion. This candle that we're forming on the monthly chart suggests to me that this is more likely a reversal signal on the dollar. Although we have a few more days to close the month, I think this candle will close either with a doji or with a bullish hammer. Okay, in other words, it's either we're going to do a pullback to about this level and close somewhere around 97.5, or we're just going to close above here and that will give us a strong hammer just based on the monthly perspective. I apologize. I was using the dollar index from TradingView, and I usually prefer the one from capital.com, so I had to change it. Okay, so here on the monthly chart again, if you look at your indicators, we seem to be forming a divergence on the monthly RSI. This is our previous low on RSI, and we have come to the same low, but see where our RSI came just up to. Again, it's not confirmed until the end of this month. That's the only thing about these divergences. Okay, but if you want to wait to get the confirmation, next month would confirm your divergence. However, this is early indication for me based on the candle that we are forming that this is potentially going to be a divergence on the monthly chart. Something I've been watching out for quite a while to give me a signal of the reverse on the dollar. And I think we are almost getting it. By the end of October, it would be confirmed whether we're going to go down some more or this is it. All right. Now, so the cycles has turned up on the monthly. And that's significant because for a monthly cycle to turn up, it means this is more likely a reversal signal again on the monthly. It may not necessarily go make a new high, but it just says that the fall temporarily is halted, and I wouldn't be looking for shorts on the dollar index in the next coming month. Again, my first MACD 6 indicator that I use for the first time is also giving us a green histogram bar above zero on the monthly chart. That's pretty much significant, very, very significant. All right, we have a signal line and MACD lines also crossing right about here. Again, this is giving me early signal that there's a change in the direction of the dollar. Um, well, slow MACD is still below zero. Everything is still below zero. So this is why I don't use the slow MACD when I'm doing my analysis. But it's important to look at it. All right. It just says that things are not in an uptrend on the dollar. In other words, the downtrend is still intact. But I'm just seeing a reversal occurring under the hood. All right, let's step down to the weekly chart and see what the weekly chart also looks like. So on the weekly chart, there was something that I discussed last week in my previous video, right? And I was saying that the dollar had been closing within a very tight range. For the first time, we've closed outside this tight range. And based on this closing outside this tight range, also above this resistance that was displayed on the daily chart. So on the daily chart, this box here was our resistance zone. We have solidly blew through this resistance and closed above it. We have pulled back into this candle, and if the next week that we're starting off, I think today at 5 p.m. when New York session opens, you can expect that this may pull back a little bit down, but if we don't and we get a green candle, this is going up. Okay, so you don't want to be holding the short on a dollar or selling the dollar when the dollar index is going up. All right, again, this is our invalidation level. Once we get a candle open and close above this level, you know that that's cement the fall on the dollar as over, and you should be looking for longs on the dollar. Let's step down to the 4 hours and then we'll move on to our next asset as I'm trying to condense everything under 20 minutes today. So on the 4 hours, this is the pullback that we've seen on the dollar index. And I think based on this, this is either an ABC correction or this is going to do one, two, three. This is a four, and I'm expecting a five wave that would probably push us above this invalidation level to probably what 98 800 thereabout. Okay, so if it would have to break this level. This is a very important level, and once it breaks this level, potentially by the end of the week, I would expect this liquidity zone to be touched. Okay, it just might not go straight to it, but this is an area I have already put on the chart as a potential area for price to come up to. So this is where my target zone is on the dollar index in the next coming week, somewhere around 99.6. But our initial move would be somewhere around the 98 800 to about 99 thereabout. Ultimately, this is where my target zone is for this coming week on the dollar. Okay, so that's the dollar index. Let's quickly look at GBP USD and Euro USD. Forex pairs, and then we shall move on to Bitcoin, Bitcoin dominance, and Ethereum. So quickly, this is Euro USD on the weekly chart, pulling data from Owanda. So here on Euro USD, just as we saw the hammer on the dollar index, you could also see here we have a shooting star on Euro USD, signifying that this top is probably in, and we have gotten a confirmation of this shooting star with this candlestick that was formed last week. With this red candlestick or bearish candlestick that we have on here, this confirms this shooting star. So in the next coming week, I'm expecting Euro USD to also do a pullback into this zone here. This probably will be the 0.382 level. Somewhere around here will probably be a good target because there's liquidity in this candle. So on Euro USD, I'll probably be expecting price to come somewhere here. Okay, somewhere around the 1.15. That'll be my target for Euro USD. Um, it may go down some more after that, but this is just an initial target. So we just put that target one, and then we'll see how that unfolds. Let's quickly also look at GBP USD. And again, GBP USD, we have a confirmed double top here. Now, while this top is slightly lower, I still consider it a double top. I think GBP USD would also make its move towards at least somewhere around the 1.32 as its target in the next coming week. And now let's look at Bitcoin. We should also look at Bitcoin dominance and Ethereum in the next few minutes. So Bitcoin has done exactly as we were looking at last week. I was expecting a doji, but actually we had a reversal doji, what they call the gravestone doji. formed last week, this candle right here. And in the past week, as you can see, it brought us down. The thing is, we've come back down to the 21 period moving average, and again, it's being tested. This 21 period moving average support is being tested. Now, based on this bearish candle that we formed this week, I'm quite confident that the next coming week we will break this 21 period moving average to our next support level, which is somewhere around here, which is the 100, 105 to about 100 level. So this way I'm expecting our price target to come to in the next week for Bitcoin. Stepping it down to the daily just to look at how things are unfolding. As you can see, we're getting a lot of hesitation right here at the 21. It's the same area that buyers stepped in to push price up to the 618.618 level. And so these people are still now looking, okay, do we get out? Do we sell? Or do we just close out our trade? It's a decision making process because of what happened here, right? But at some point, decision will be made. And I think based on the bearish candle that was formed last week, that this is going to consolidate and it's going to break down to our target zone. And I think the 102 target is for sure in line now. Although I expect a pause somewhere around here. Okay, in the best target, they're definitely going to pause, probably accumulate a little bit here, and they may push down towards our intended target for Bitcoin. Indicators wise, let's see if the indicators speak any other language that we are talking. Well, we do have a cycle low on the daily. Again, this cycle low suggests that there's going to be sideways price action probably in the next few days into this week. We might get a little bit of a bounce here and there. Probably a bounce to about 111 is on the cards. Okay, we could bounce to about 111 before the move down towards the 100 or 102 target. So that's what I'm seeing on Bitcoin. Quickly, let's step down to the Bitcoin dominance and then Ethereum. So again, dominance on the weekly chart, dominance is giving us some green candles. We went to test the 9 period moving average on the weekly, got a little rejection and pushed back down. Now, again, if the week is going to end like this is a bullish signal, all right, for dominance. When the week closes in green, solid green like this, you look at your MACD, MACD is green. Your long-term MACD is also changing. um this tells me dominance is going to go up some more in the next coming week, just based on my first MACD indicator. Cycle wise, again, our cycle low is still intact. We're still grinding up. We haven't turned down yet, supporting the cause that dominance is going to go up. And I think in this coming week, if we do go up, my target is somewhere around here, somewhere around the 59.89 level. Again, when I step down to the 4 hours, I'll show you something on 4 hours that's very interesting as I was doing the analysis on dominance. Okay, so if you look at dominance on 4 hours, this is why last week I was saying that the fact that it's hit this level and held up this level could be given as a push to the upside. This was our bounce invalidation level, and we've clearly bounced above it. Okay, so if we close up below here, then further downside was on the dominance, but we closed above it strongly on the 4 hours, as you can see here. So if you count this is like a wave one, wave two right here. This from here to here, I'm counting it as a wave three. And then we pulled back to the support, which is the 50 period moving average on 4 hours. And as long as this support holds, we're probably going to do a wave five. And should we do a wave five? Yeah, I'm expecting target to be somewhere around the 59.89. So if you're wondering how I arrived here, this is how I arrived there. All right, quickly, let's step down to Ethereum. All right, so this is the chart of Ethereum on the weekly chart. And again, as we noted from previous videos and previous analysis, that Ethereum would definitely have to come to this 3823 level, which we did mark about 3-4 weeks ago. All right, so this was a 1-2-3 correction move of the move above its previous resistance level. But again, like I always say, this is a double top to me on Ethereum. This is 2021 high. and we've come to this same high. So I'm expecting probably a much stronger pullback on Ethereum still. Now this support is being contested at the moment. We shall see whether this support holds. But if this support holds, then Ethereum probably will be grinding much higher in the next rally up. But let's look at the indicators to see whether we're going up anytime soon or not. Okay. When I look at my fast MACD, there's not been any change on it at the moment. We still have MACD energy still to the downside. Histogram bars are still pointing solidly to the downside. This tells me there'll be more falling on Ethereum. RSI wise, look at your RSI. RSI is now also dipped below the 50% level. We haven't gone below the 30 yet, but this is signifying weakness based on the weekly. Cycle is also turned down. We haven't turned up yet. So again, it's all in support based on the weekly that there would be more falling on Ethereum. Now let's quickly look down to the daily chart, see what is imminent in the next few days, which will then give us our weekly perspective. So again, I'm expecting our target zone for Ethereum in the next coming week to come somewhere around here, which is the 200 period on the daily chart. Okay, so this is where I'm expecting the next target to be. Next target, and I'll call that target 1. All right, so we shall see how this unfolds, but my next target for Ethereum is somewhere around the 34 level. And again, this is because this area here, as I'm pointing here, was significant interest. All right, there were a lot of buyers here that pushed price breaking through the all-time resistance into a new high. So again, I want to see whether the buyers here are going to defend this price or they're going to bail out. So let's see what price gets here, what Ethereum happens. But that's my projection on Ethereum. The next assets that I'll look at would be NASDAQ 100, SPX, and we shall look at gold and silver to wrap up our 20 minutes market analysis. Okay, so this is the NASDAQ 100 on the weekly time frame. And again, we missed our target for last week. Last week, I was expecting us to make it to this level. Though we made a little push, we couldn't get anywhere close. So this target is now invalidated for the meantime. I'm not expecting this target in this coming week. My target in this coming week comes here, somewhere around here. All right. So I'll put my price cap somewhere here, and I'll explain how I think there might be a pullback on the Nasdaq. One, we've gone outside our weekly KC band, okay, and we're getting a rejection outside the band. This usually tells me the price is going to retrace into the band. Now, how far into the band? We may come up to right about 23, about 23,796, right about this level, or we may push to this support zone that consolidated to push higher. So I'm looking at the Nasdaq to do a pullback, and my target zone is somewhere around here. Now, indicators wise, the Nasdaq is showing some weakness also, because if you look on the RSI on the weekly, this is our previous high. We've made a higher high, but our RSI has just made a lower high. So again, this is a divergence that has developed. By the end of this week, this divergence will be confirmed. If we get a red candle by the end of this week, that will confirm this divergence. And a weekly divergence will usually signify a much longer correction, which means I expect the correction to last more than at least 2 weeks, maybe 2 to 3 weeks correction, by which time RSI would have cooled itself off into the 50% level on the weekly chart. Then maybe Nasdaq probably will find support and do another push up or to another high. I don't know, but we shall see. So that's what I'm looking at indicators wise. Now, a long term indicator is also showing the same divergence, although it hasn't crossed down yet. But you can see that momentum is dying out. We've been getting a little bit of a spark of momentum, another spark of momentum, but overall, momentum is dying out, it's coming out. Okay, we haven't crossed down yet, so I wouldn't say sell your stock, run out of the market, because this could pick up a little bit more. It's just that I'm looking at the divergence on the RSI and saying this is not the time where I want to be buying. Okay, if anything, I would want the pullback to occur, and after the pullback, you could load up on your SQQ, I mean your QQQ, or your tech stocks. But I expect a pullback on tech from this level into the Bollinger Band, I mean to the KC band in the next coming week. Quickly, let's also look at SPX and gold and silver. 20 minutes is already almost expired. Okay, so the story on XPS 500 is not much different from that on the NASDAQ 100. Also, we closed the week with a doji, a red doji. All right, so again, here is an indecision, bearish candle, suggesting again to me that the uptrend or uprise is momentarily paused. We're getting some rejection above the 68, 80 level. Again, here too, we outside our KC band, and we're getting a red candle. So I'm expecting us to push back into the band. And my target wise is somewhere around the 65.23 on XPX 500. Indicators wise, let's see whether indicators point to any other, indicators wise, here we have an equal RSI high, even though we've made a higher high. So it's not a strong divergence, but again, this also suggests that a pullback is imminent as we've hit the previous RSI level and we are not able to go above it. It tells me that strength is coming out on based on the weekly setup. If you look at cycle, we still at cycle high, suggesting that a cycle correction is also imminent, and that we might be doing either a mid cycle or we might be coming all the way down. Now, time will tell if we do. But for long term investment, we haven't had a crossover on our MACD yet, so it doesn't again also mean that exit all your stocks and run away. It just says that a pullback is imminent, and I think it's again displaying itself in the histogram bars on the MACD indicator. And finally, let's look at gold and silver to close the weekend analysis. So gold is still in a strong uptrend. We closed this week with a solid green candle. Indicators wise, like I said from last week, RSI is very overstretched on our gold trade. All right. So when gold gets to this RSI level of about 90, 91, we usually get a pullback. So keep this in mind, okay, as we unfold this weekend analysis. You would again agree with me when I make my conclusion. When RSI gets to about 94, between 90 to 94, okay, gold does pull back. It's just a sequence, 93, we had a pullback. So we've come to that same level of RSI. In 2023, gold got to the RSI of about 92, we had a pullback. So history is just showing that we've come to that same level of RSI now at RSI 90. And I think with this, gold might do maybe, just maybe, a small push up to the upside, and then we're going to have a pullback on gold. It doesn't mean the uptrend is over, it's just a pullback. All right, so I'm expecting a pullback on gold just based on my settings here. We also do have a cycle high on our stochastic cycle, and the stochastic cycle, as you have also noted on the weekly chart, every time we get up to this level, we seem to always come back down. So gold is quite overstretched in my opinion, and I'm expecting a pullback on gold. Now, let's quickly look at the daily to confirm our pullback if it's for sure. All right, so again, on the daily, you could see a lot of hesitation here ever since we crossed above. This is a Fibonacci 1.618 level that I marked on the monthly chart. Okay, so again, it's a significant resistance level, and we're showing hesitation. RSI is overstretched, and I think gold will probably do a pullback. Now, if you should do a pullback, where's my target zone? I think gold might probably do a pullback to about this level. All right, so that's where my target zone is, somewhere here, somewhere within this level of consolidation. So I expect gold to come somewhere around the 36.50 to 36.63. That'll be my target zone for gold. And finally, let's look at silver. Silver has done a very strong parabolic move so far. It's been a great trade for me. For full disclosure, I took profit off my gold, my silver and gold trade this past week. As I've noted, things are overstretched, and I'm expecting a pullback on these assets. Same story goes with silver. I'm also expecting a pullback on silver. Now, whilst the week closed with such a solid green candle, you would expect us to grind a little bit higher. And should we grind a little higher, here again, it's called the risk reward, right? Silver could make it up to the 2021 tops resistance, which is just about $48 thereabout. But again, the risk reward is not in for me, from about 46, from about 46 to 48. It's a $2 risk that I'll be putting on. And the reason is because, again, on silver, similar to gold, RSI, in my opinion, is so overstretched. Now, of course, if I hadn't already sold my position, then I'll probably hold some just to get to the 48, but I won't open a new position at this level on silver. If you look at your RSI on the weekly, RSI is at 94. That's quite overstretched. Now, could we just grind a little bit here until it hits the resistance level? It sure could. But I looked at the lower time frame and things are looking a little bit shaky. um, Cycle wise, we also do have a cycle high on the weekly, suggesting that more likely we're going to come make a mid cycle or come and put in a low cycle. So again, this is the reason why I'm expecting a pullback on silver. MACD is shooting to the moon. A strong momentum behind it, but I think the momentum has hit a wall, and that's where the pullback is in my opinion expected. Also, if you look carefully, we also outside our KC band, and now we also outside our Bollinger Band. Two standard deviations. Okay, when price goes two standard deviations outside these two bands, it just tells me things are quite overstretched statistically, and more or less looking unsustainable for it to keep going. That doesn't mean we can't just get a capitulation move to the 48. I'm not expecting price to make it about 48. That would be unexpected to me. I'm not saying it's impossible, but highly unexpected that we go about 48. All right, so stepping it down to the 4 hours on silver, see what clues we get on the 4 hours. So we had a strong green candle that pushed us up above, but again, we also getting a strong rejection on the 4 hours to the point that we actually did close with a shooting star on 4 hours. This is why I'm expecting a pullback on silver. When you get this momentum that pushes up, you expect that that momentum would keep pushing it. And if that momentum is not able to keep pushing it, and we end up with such a shooting star, this is a hallmark signal for a pullback, and I expect silver to also do a pullback. So I think in brief, we've done our analysis on Dixie, Euro USD, GBP USD, and we're concluding with gold and silver. And I'd like to thank you for spending your time, listening to the analysis. I hope you find value out of it, and I'll come back next week. If there's update, I would update, but I'll make another video next week. Cheers and have a great trading week.